Another big deduction that they put in that may be actually will be a benefit to anybody that makes money from their business is there's a new provision that gives a 20% deduction for your income from a trade or business. So it's pretty good. So basically, you have a Schedule C, which again is when you are in business for yourself, or you get a 1099 from people. Your net income from that, we're going to be able to take a 20% deduction from your taxable income. It's not a credit, it just reduces your taxable income by 20%. But it doesn't matter whether you itemize your deductions or not. So this is an addition to your standard deduction. The way to compute that is you take line 31 here, which in this case is $19,620. So that's your profit from your business. But you do have to subtract a few things before we get to figure out what the 20% deduction is. So from that figure, we're going to deduct half of the self-employment tax that you wind up paying. And again, we'll talk about self-employment tax later, but just briefly. And that is going to be on page 2 on one of our new schedules. That's on line 27, where it says the deductible portion of self-employment tax, which is basically half of whatever you pay in self-employment tax you get to deduct. Well, that you have to reduce your net income from your business by that amount. In addition, you have to reduce it by any self-employed health insurance deduction that you take. You're entitled to take, if you pay for your own health insurance and you're self-employed, you do get a deduction for that health insurance. And it's not an itemized deduction. You get to take it whether you itemize or not. It is limited to up to your net profit from your business. So if you make $5,000 and you have $10,000 of insurance, you can only deduct $5,000. But still a good deal. It will be on line 29, that deduction for self-employed health insurance. And basically, if you have your own health insurance and you're self-employed, you can take deduction on line 29 here of whatever amount you wind up paying. Now this would be net of any, if you have Obamacare credits, covered California here in California, you would reduce whatever you wind up paying by that amount. And then the final thing you have to deduct from your business income is if you make any SEP contributions. SEP contributions are like IRA contributions, but you can make them if you're self-employed. And you can contribute up to 20% of your net income for retirement purposes. So that's the 3 deductions that we're going to that you have to take from your business income. But whatever's left, you get an income tax deduction of 20% of that amount. Now that deduction is going to show up on line 9, which is the qualified business income deduction. And again, you get that deduction whether you itemize any of your personal exemptions or personal expenses or not. So it's a good thing. All right, so that's the main changes. Maybe real quick, does anybody have any questions on changes that they are confused about? Or yes. The question is about whether Social Security is subject to self-employment tax, and it's not. Self-employment tax is only on net profit from your business activities. So any wages, interest income, dividends, Social Security, pensions, you don't pay the self-employment tax on that. It's simply on profit from your business. Let's go on here then and talk about some of the deductions. And I want to go over the forms a little bit before we even get into that. So let's turn again to Schedule C. If you have income that is not wages and it's from a business activity, it would be reported on Schedule C. And this Schedule C, as it says, is a profit and loss from your business. So a couple things I want to point out, just sort of in the mechanics of filling out the form. If we look right near the top in the upper right-hand corner, Part B, where it says enter the code, for artists, that's the number. These codes are in the instruction booklet, but I'll give you that number. For musicians, anybody, any creative artist, that's the number. Filmmakers will have a different number. 2, and this is a counting method on line F. So there's basically 2 methods of accounting. One is called the cash method, and one is called the accrual method. I have never, I'm trying to think, I don't think I've ever seen an artist that's been on the accrual method, so I'm not going to really talk about that. The cash basis says is that basically you pay tax on income when you receive the income. So it's not when you deliver the painting or the work that you do or perform the services, but when you get paid for it. And conversely, you don't get a deduction until you actually make the payment. So if somebody's done work for you in the current year, but you pay them in 2019, you get the deduction in 2019 rather than this year. Generally speaking, it's a good deal for artists and for everybody, because most of the time people owe you more money than you owe them. And so it works out well in that regard. One exception to this rule is that if you charge an expense on a credit card, those are allowed to be deducted in the year you make the charge rather than in the year that you pay the bill. So if you charge something by December 31st of 2018, you get that deduction in 2018, even though you pay the bill in 2019 or even later, for that matter, even if you carry it and don't pay it all off in time. So that's somewhat of a taxpayer-friendly provision. A couple of questions that come up in cash basis, and we all have them if you've been in business long enough. Bad debts. Somebody owes you money and you don't get paid. And the question is, can you take that as a deduction? And the answer is no for cash basis taxpayers. The reason is that you never took in that money as income, and therefore if they gave you a deduction for it, it'd be like a double dip. So no deduction if somebody hasn't paid you. You would be able to deduct whatever it costs you to do that work or do that painting or whatever, but that's about it. So it's, yes. The question is, if you're a painter and you've given this person a painting and he said, I'll pay in 2 weeks when I get my money or whatever, and they never pay you, there's no deduction for that if they don't pay you, unfortunately. You have not paid any tax on that income because under the cash basis method, you don't pay tax on something until you receive it. Since you never received it, but you don't get a deduction for it either. It's just a wash. Yes. This is if you've loaned them money. You can certainly take a deduction for that. If they gave you a note for your services, it's actually kind of a bad deal, because if they do give you a note for your services, that actually is income for you then. And if you don't get paid, then you could take a bad debt deduction for that. But that doesn't happen too much. It's usually when you loan a friend money or somebody you know or whatever. And then you can take a deduction, but it's a little more complicated. Kind of in the same vein here on these types of income things, people want to know, can I take a charitable deduction for performing services for a charity, like California Lawyers for the Arts, like tonight for me, this is a charity. Or I give, a lot of times people will give, very generously will give paintings to an art auction or something like that. And unfortunately, it's sort of the same theory there. No deduction for it, because you never had income from that piece. You can deduct the cost of of doing the painting, the paint and the canvas and all that kind of stuff. And tonight I have a bridge toll and coming over here and some of that stuff, so I could deduct that, but no deduction for your time.
Thank you very much for watching. If you would like to see more videos by California Lawyers for the Arts, please like and subscribe to CLA's YouTube channel so we can provide full-service live streaming programs soon. Our channel will be producing videos that cover all kinds of artistic, entertainment, and intellectual property legal issues. You can also find our videos on Facebook and livestream.com.